Whereas Gaba PLC suffered no impairment loss due to the line of business, Jewel PLC had suffered an impairment loss of 60 million naira. Number 5. During the year ended October 31, 2016, Bata PLC had sold inventory to both Jewel PLC and PLC. The invoice prices of the inventories were 480 million naira and 360 million naira respectively. Bata PLC invoices goods to achieve a markup of 25% on cost to all third parties, including group companies. At the year end, half of the inventory sold to Jewel PLC remained unsold, but the entire inventory sold to Gaba PLC had been sold to third parties. 6. Bata PLC purchased a deep discount bond, an innovative financial instrument in the Nigerian capital market, 500 million naira on November 1, 2015, switching from its equity holdings in that market, where equities had suffered huge losses. The bonds will be redeemed in 3 years' time for 740.75 million and are carried at amortized cost in line with IAS 39 financial instruments recognition and measurement. The accountant is not clear as to the correct treatment of amortized cost and as such has not passed the correct entry to give to amortized cost valuation year end in the financial statement. As such, the financial asset is shown as 500 million. We have some information required. Prepare a consolidated statement of financial position for Bata PLC and its subsidiaries at October 31, 2016. B. As a result of the challenges in the foreign exchange market since
You
the
can ignore
advent of
the B
foreign...
part. You can ignore the B
Okay.
part. So we're focusing on the A part. So, ladies and gentlemen, this is the questions that we have. So, as you know, the first step is to quickly you sketch out your skeleton, right? The solution. So let's do that here. I have my own solution here. Bata PLC, right? Consolidated statement. So I have started recording of financial position. As at what date, please? Can you tell me? You have a question
October 2016.
As at October
31st October 2016.
31st October 2016.
Perfect. So give me those details that we have. We have assets. Under asset, there is
non-current assets.
What do we have under non-current assets?
PPE.
Property, plant and equipment.
PPE followed by
goodwill, investment in subsidiary.
That will be goodwill and financial assets, right?
Yes.
Okay.
Then we have current assets.
Hold on. We have everything is in millions. Is it millions or thousands?
Yes, millions in naira.
Millions in naira. Everything is in millions, right? So we need to indicate that as well. Okay. All right. So we have this, then followed by current assets, and that is all, Abi.
Yes. Then we have total assets.
Then we have total assets. Fine. Then equity and liabilities.
Yes. Share capital.
Equity. What do we have under
share
equity?
capital?
Share capital. Followed by what?
Reserve.
The consolidated, the reserve and other components of equity, right?
Yes. The another component of equity.
Okay, then we will introduce non-controlling
NCI
interest, correct?
Yes.
Then having done all this, so we should be looking at what?
Current liabilities.
Yeah, just a minute, please. Okay, so we should be looking at the current liability, and that is all right. Am I correct?
Yes, sir.
Okay. Now, so this is the first step. Second step. So the first step is to work for it to sketch your solution. Where are the people joining the class here and there? All right, the first step is to sketch the solution, which we have done now. So let's move on to working. So if you look at note A, the first working is a shareholding analysis, right? Am I correct?
Yes, sir.
Yes.
Yes,
The shareholding, you can unmute, don't worry, just so that we can interact. But in case you're in a noisy place, please mute your mic back. So the first one states Bata acquired 60%. Look at it. Bata acquired 60% of the share capital of JWay on 1st November 2012, right? That's the first thing. So we have
Yes, sir.
Bata in JWay, which is what? 60%, right? And this was done
Yes, sir.
on 1st November 2012. So this is the first things that we need. Then they said, and 10% of GABA on 1st November 2013. That means we also have Bata in GABA, which is how many percent? 10%, right?
10%. Yeah.
10% on November 1, 2013. Okay. Then also the state also stated that JWay acquired 70% of the share capital of GABA on what? On November 1, 2013. Yes.
2013.
So we have JWay acquired 70% of GABA. So this is it. JWay PLC in GABA, that's 70. I think this is all. That is all, Abby. So that's all about the
Yes.
Yes, sir.
percentage of shareholding. So the first thing you do is for you to first of all draw the what's it called, the analysis. So let me bring out my marker. Now, so who is in, first of all, have you been able to identify the parent company?
Better.
Right?
Yes,
Bata.
sir. Yes, it's
Bata,
Bata.
right? So
Yes.
Bata is a parent, right? So
Yes,
Bata,
sir.
we have Bata in JWay, right? Then we
Yes,
also
sir.
have Bata
Bata
in
in
GABA.
GABA.
In GABA. Then we also have JWay in GABA.
In GABA.
This is what we have, right? So here, Bata in JWay is what? 60, right? It's 60%, correct? Then
Yes.
Bata in GABA is
Yes,
how many
sir.
percent? This is 10.
10%.
Then
It's
JWay in
10%.
GABA is what?
70%.
70.
70%.
Okay, so this is what we have. So when you have this kind of a group structure, what do we call this, ladies and gentlemen?
Is a mixed or a group?
What do you call this type of
A
group
mixed
structure?
or joint subsidiary?
Is a joint or mixed group, right?
Yes.
This is an
Yes.
example of joint or mixed group. This is an example of joint or mixed group. You remember that? Okay, let's complete all the necessary informations now. Back to the note. I'm still on note 1. No, I have not left note 1. They said that Bata PLC purchased 60% of share capital of JWay on 1st November and 10% of GABA, and the costs were 852 and 258, right? So what it means is that this one was purchased for 852 million, right? And this one was purchased for how much?
258 million.
258. Okay. Did they give us how much Jewe paid to Gaba?
No,
They
they
said
just
that
said 70
Jewe
million.
acquire
70%.
70% of the share in Gaba, but you should be able to detect this in your SOFP, correct?
Yes.
So check how much did Jewe pay to Gaba now?
It's 600.
It's 600, right?
600.
So can you sum up that
Yes.
258 and the other one? Does it equal to 1110? The first two purchase
Yes, sir.
consideration, 852
Yes,
and
sum up.
258. You can see that is for this, right? Then
Yes.
the
Yes.
other one is all right. Sorry, just I quickly had someone entering my office. Okay, so we have been able to reconcile these two purchase consideration, right?
Yes.
Are we together?
Yes.
Yes, sir. Yes, sir.
So this 600 was paid from Jewe to Gababi. Then this 1110 is a combination of 852 that Bata paid to Jewe and 258 that Bata paid to what? Gaba. Is that clear? Okay. So this should be 600. Now that we have all the necessary information that is required, so the next thing you need to do is you can't even do any consolidation on anything now. The first thing that you need to do is to convert these group structures to what? To a fellow subsidiary. For example, this is an example of joint or mixed group. Joint or mixed what? Group, correct? Is an example of joint or mixed group. It is an example of joint or mixed group. So I'll be writing all my analysis. That's the advantage of online class, so that you will be picking everything. So the first step is to convert the group structure to fellow subsidiaries, right? So how do you do that now? We already know that beta in Jewe. Sorry, beta in Jewe is 70%. No brainer, right? Please, are you getting it?
60%.
Then is it 60? Okay, you are correct. It's 60. Sorry, permit me. I will just remove this. We are done. We have analyzed it already, so that I'll be analyzing note by note like that for you. Beta in Jewe is 60. So this is clear. 60. Then beta in Gaba. Beta in Gaba now. We have direct and indirect. Indirect. So who can tell me what we acquire beta in Gaba directly? How many percent is it? Beta in Gaba directly is how many percent?
10%.
10%.
10%.
Okay. Oh, I'm hearing the first guy speaking today. It has always been Lady has been the one speaking since morning. It's like they told you guys, don't speak today. It's our turn. Our locum. Okay. Now, who can tell me what is the indirect of beta in GABA? What's going to be the percentage for the indirect?
60% of
60% of what?
70%. That's 42%.
Okay. That's 60% of what Jewe acquired in GABA, right? Perfect. So that's 60% of 70%, right? That's how much?
42%.
42%. So the total now is what?
52%.
52%. 52% is the total. So that is all. So this is what we have now. Correct? This is how the group structure looks like. So let me now show you the new group structure. Let me show you the new group structure. So we have it like this. So this is the Jewe. right? This is the, this is the Bata, sorry. Beta is a parent, or Bata or whatever. And this is Jewe. And this is GABA. So here is 52. And here is what? 60. Do you get it? So this is how you will consolidate going forward now. So that's a new group structure that you are going to use in consolidation. Any question before I move on? Any question before I move on, please? It's clear. It's clear, correct? Yeah?
Yes, sir.
So the next stage is to determine the purchase consideration. Purchase consideration. Now, for the purchase consideration now, there are two things involved here now. The first one is how much did Jewe pay to. So, first of all, we have okay. The first one is Bata self, not Beta, is Bata. So the purchase consideration now, there are two subsidiaries involved. We have the Jewe and GABA, right? So the first purchase consideration is how much did Bata pay to Jewe? That one is clear. How much they gave us? That Bata paid how much to Jewe? How much?
852 million.
852 million. That is very correct. Bata paid 852 million to Jewe. Now, what about Bata in GABA? So here, there will be two things here. The first one is a direct. The direct is the 10% that we acquire. How much did we pay for? How much did Bata pay for that 10%?
258 million.
Is it 258, 252? 258.
58.
258, correct. It's 258. Now, who can give me how much will be the indirect purchase consideration? The indirect will be what? Who can tell me how much is going to be the
70% of
360. That will be 60% of 600.
That is what? You said what?
60% of 600,000.
60% of the amount
Of
of
600.
600.
Okay, it will be 60% of what Jewe paid to
Of
GABA,
600.
right?
Yes.
I want you to
Yes.
analyze it like that. Don't just say 60% of 600. You should be able to say 60% because Better own 60% of Jewe. So it will be 60% of what Jewe paid to who? To GABA. I hope you are getting me right. So don't just say 60% of 600. That's the analysis. 60% because Better owned just 60% in Jewe. So you can only contribute 60% to what Jewe is actually into, right? So the balance of 40% will be contributed by the NCI of Jewe. They are the one that will contribute the balance of what? 40%. So the 60% that Better own in Jewe is what Better will contribute to the purchase consideration that Jewe used in acquiring GABA, so which is 600, right? So Better will contribute 60%, while the balance of 40% will be paid by the NCI of Jewe. I hope it is clear to everybody, please.
Yes.
Thank you so much. 60% times what? 600? How much? 360, right? Is that correct?
360.
So what's the total now?
Yes.
What's the total?
1470.
1,470,000.
470,000.
Now, so the NCI of Jewe, they will have to contribute the balance money. NCI J, they will pay 40%. of 600. How much is that?
That's 140.
240.
So when we are computing NCI for JW, we must remove this money from their money. We must deduct it from their fund. So ladies and gentlemen, we are done with
That's
the
240.
It's 240. It's not 140.
it's 240. So ladies and gentlemen, we are done with the first workings, please. Okay, we are done with that, please. We are done with the first notes.
The 1470, is it the
No, it is wrong. Oh,
budget
it is wrong. Just total 258 and 360 now.
618?
618.
Okay,
Yeah.
618.
So beta in GABA is 618, beta in JW is 852.
Okay.
So we are done now. So workings 2. Working 2. Now, so note 2 state that in note 2, they said that the balances on retained anywhere this. So you can see what I taught you the other day, that you need to understand the effective date of consolidation, right? In this case now, what date do you think GABA will be consolidated? Is it going to be 2013 and 2012? If you want to consolidate GABA in the books of JW, what date are you going to use? 2013 or 2012?
2013.
20 what?
2013. 13.
2013, right?
Yes.
Why not 2012?
Yes.
Because it was acquired in 2013.
It was acquired in what?
Oh, wait.
Okay,
It's
so you can see that
2012.
2012. 2012.
it was is it 2012 or 2013? I'm confused now.
2012. November
2012.
1, 2012.
No, GABA. What date are you going to use in consolidating
No.
GABA? GABA.
Oh,
What date?
GABA is
are you going
Okay,
to-
and GABA will be 2013.
GABA will be 20 what? 13 because there was no GABA in 2012, right?
2013.
So
Yes.
you can see the way it works. In ICANN now, they are giving you GABA 2012, GABA 2013. So if you don't understand this principle, some people will go and use what 180, which is actually the wrong answer as your pre-acquisition reserve. So please don't fall into that trap, okay? So now that we know, so we shouldn't fall into this trap. So when I request for pre-acquisition reserve, please you will call the figure for me. So let's move on now. Note 3. At the respective date of acquisition, the fair value of net asset of JW was 930 and GABA was 660 million. The differences in the fair value and book value of the net asset at the acquisition date relate to non-depreciable land. And the fair value of the NCI in JW at the acquisition was 390 and GABA 330. Meta PLC adopt the full goodwill method. You can see in our previous question, we have been adopting it proportionate. Now, they said that they adopt full goodwill method under IFRS 3. So here we are using full goodwill method. So I think with this information, because we have gone through the questions, others adjustment are standalone adjustment. They don't really affect our goodwill. So let's compute goodwill now. Computation of goodwill on acquisition of JW and GABA. Somebody is at the entrance. Let me admit the person. Okay, this person has been admitted. So I want to use one stone to kill two birds here. So I will just use one because of, in the exam, you are fighting against time and everything. So we can compute the goodwill together. JW. We have GABA here. Okay. Okay. So what is the purchase consideration? Sorry, I hope you are also writing along, right? Are you writing?
No, you are fast.
That's nothing.
Okay. Is it the way I'm teaching or the way I'm typing? Which fast do you mean?
We can write it later after the class.
Okay, I can send you this manuscript. Anyway, the class is recorded also, so I will send you this manuscript. You can review it and write. Also, you can rewatch the video. I will load it on YouTube once we are done. You can rewatch it again. But what matters most is for you to understand the way I am explaining and solving the question. Do you want me to reduce my space since you said I'm too fast?
Yes, sir.
Okay. All right. So the computation of goodwill on acquisition of Jewe and Gaba. So what is the purchase consideration now for Jewe and Gaba? What is the purchase consideration?
Well,
Jewe is
852, then Gaba is 618.
852, Abi.
Yes.
Yes,
What's
Jewe
Gaba?
618.
618.
Do you know why you are able to quickly answer it? Because we have already done it, Abi.
Yes.
So
Yes, sir.
what's the fair? You know, now they said that we should use fair value method or full goodwill method as against the proportionate. So when under that, you need to add the fair value of NCI to the purchase consideration, which will be given to you. So what's the fair value of the NCI of Jewe and that of Gaba? How much?
Jewe is 930 million.
No. Fair value of NCI. See it here. That's what I have highlighted.
390 and 330.
390 and 330.
330.
390
390
and
and 330.
330. So you can add up. Add up.
720.
Which? No.
The both of them.
Yeah.
1242. 1,242 for Jewe.
This one called
948.
like this, Abi.
Yes, sir.
Correct?
Yes.
Sir, sorry. So just to clarify, I just wanted to ask. So the fair value that we're going to use, it will be for the NCI.
Well, okay. The method that we are adopting is proportionate. I mean, it's fair value method. So under fair value method, you need to add that fair value of NCI to your purchase consideration. Then before you will now deduct the net asset acquired from it. So just watch. Let's do it together. Okay.
Okay, sir. Okay.
Let's net asset at the date of acquisition, right?
Yes.
Or net asset acquired, whichever one you prefer to use there. Whichever terms you want to use. So what is the share capital? Share capital of Jewe?
600.
600.
600.
Yes.
What about Gaba?
Gaba 300.
Okay, it's
300.
600 and 300, right?
Yes.
Okay, now pre-acquisition reserve. What is the pre-acquisition reserve now for Jewe? We
Yes.
acquired Jewe in what date, please?
Jewe.
Go to the date you acquired the company. Jewe was acquired in 2012, correct?
Yes. 360.
Yes.
So what is the reserve of Jewe in 2012?
It's 360.
Are you sure,
Of Jewe,
man?
No, in 2012.
270.
270.
So there are a lot of
270.
poison. If you are not careful, you'll miss it. So who can tell me the reserve of Gaba? We've talked about that already. How much is the reserve of Gaba?
40.
240.
It should be 240. Yes.
It should be 2013, right?
Yes.
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 Okay. And any other thing again that we need to consider here?
Out of that net assets, Jewe and Gaba.
Yes. Okay. No other component of equity in the question, right?
No.
Oh.
There is no other
Yes, sir.
component of equity in the questions, right?
No, it's just for
No,
Basta.
sir. I think that's all.
So, okay. They now said that look at this now. They said at the date of acquisition, the fair value of the net asset of Jewe was 930 and Gaba 630. The difference in the fair value and book value at acquisition they relate to non-depreciable land. So there is a non-depreciable land which we need to bring in, right? So let's say we have land here. Now, are you following, please? So for that of Jewe, for Jewe, they said it must equal to 930, right?
Yes.
But if you add up 617 and 270, that gives you how much?
That's 870.
And they said that the fair value is 930. So what will be the difference?
270.
60.
Hmm?
60.
60?
Oh, no.
Is it
The
60?
difference of what?
It's
Between
670, 270 minus 930.
minus 930.
Yes, it's 60, sir.
Okay, 60. 60.
Yeah, because this is your identifiable asset is 930 for Jewe now. Then GABA, what's the total identifiable asset for GABA?
660.
660, right?
Yes.
So what do we have? If you total these two, it gives you 540, right?
Yes, sir.
120 difference.
Minus 660, what do you have?
120.
So I asked is it 120 really?
Yes,
Yes.
it's 120.
So I asterisk it because it is a derived figure, so that when you are looking at it next time, you know that this figure was derived. How do you understand, ladies and gentlemen? Are you getting it, please? Always not clear at all, so that we
Yes,
can
sir.
recap. It's clear to everyone, right? Thank you. So goodwill now, what's going to be our goodwill? So the goodwill will be this total here minus the total we have here, correct? So what's the total for, what's the goodwill for Jewe?
312.
Eh? 312.
312.
What's the goodwill for GABA?
288.
288. Thank you.
288.
Okay, so we are done. Ladies and gentlemen, we are done. Any question so
I think
far?
asterisk the goodwill too.
Okay, you should definitely, the goodwill. Okay, fine. So this is how to work with your full goodwill method. Under full goodwill method, we did not prorate 90, 60, 40 or something. We just took the total and deduct. Reason is because here the NCI, the fair value of NCI has been added to the purchase consideration. So you don't need to prorate your share capital and pre-acquisition reserve, but under proportionate, you will need to prorate, right? You prorate so that you can deduct the parent share from the purchase consideration before arriving at the goodwill. But under the full goodwill method, you don't need to prorate at all. Since you have already considered the NCI portion in the purchase consideration, then you can deduct the entire amount from it to arrive at your goodwill. All right, so so I'm done with this third note. Now, note 4. So the other thing we have are fast. They won't take much of our time again. Note 4, given the economic environment in the country, impairment test was carried out for subsidiary, and it was discovered that whereas GABA suffered no impairment loss due to its line of business, Jewe had suffered an impairment loss of 60 million. So there is an impairment loss of 60 million for Jewe, but GABA does not have any impairment loss. So let's show the workings for that. Impairment loss. So who suffered impairment loss? Jewe, right? Am I correct?
Yes, sir. Yes,
So
sir.
Jewe is a subsidiary. Now, I told you that under full goodwill method or fair value method, any impairment loss of subsidiaries must be borne by both the parents and what? NCI. Do you still remember that principle?
Yes, sir.
So under full goodwill method or fair value method, any impairment loss must be borne by both the parents and what? NCI, but under proportionate, the impairment loss is borne by the group alone. You don't share with NCI. So here, there is an impairment loss of how much? Loss of how much? They say 60. So you say debit group P or L. How much is the parent? Does the parents own Ijaola?
930 million.
No, how many
930
percent?
million.
How many percent does the parents own in Ijaola? How many percent?
60%.
So what is the 60% of 60? How much?
36.
66.
36.
What did you say?
36.
Then the balance, you debit your NCI with the balance, right? That's 40%. NCI, 40% of 60. That's how much?
24.
24.
Then you credit your
24.
24. Then you credit what? You credit your
Goodwill.
goodwill with 60. So that has taken care of that. So
sir, this apportionment of impairment loss is only when we are using fair value method to do that.
yes. Fair value of full goodwill method. So that's for this note. All right, let's move on to the next note now. Let's move on to the next note. That's note 5. Note 5. So working 4. I think we are just about 2 more notes left, Abby. Right?
Yes, sir.
So now the next note.
After this.
2 more, after 2 more now. So during the year ended, Bata had sold inventory to both Jewe PLC and Gaba PLC. The invoice price of the inventory were 480 million and 360 million respectively. Bata PLC invoices goods to achieve a markup of 25% on cost to all third parties, including group company. At year end, half of the inventory sold to Jewe remain unsold, but the entire inventory sold to Gaba had been sold to third parties. So do you understand the meaning of that, please? Right? Hello, guys, are you with me?
Yes, sir.
So what remains is that you need to calculate the unrealized profit. And like I explained to you previously, that unrealized profit should be calculated only on closing stock, right? You only calculate unrealized profit on closing inventory. You compute your unrealized profit on closing inventory. So here they said that half of the inventory sold to Jewe remain unsold, but the ones sold to Gaba had been sold to third party. So for the sales made to Gaba, there is no unrealized profit since it has been sold to third party. But for the ones sold to Jewe, there is an element of unrealized profit on the sales made to Jewe. So there is going to be an element of unrealized profits. I hope you get me, Abby. So because the one sold to Gaba had been sold to a third party, but that of Jewe, only half of it has been sold. And you always calculate your unrealized profit on the closing inventory. Wow, I need to exit this class by next 5 minutes. I have another important thing to attend in the office here. Okay, so you know what, let me finish with this note. So when I'm done with this note, we'll just stop here. So we'll continue the class on Wednesday. Okay, we will continue the class on Wednesday. First, we'll wrap up this question, then take up the new question on Wednesday. So let me finish this particular note so that we'll just stop here for today. Then I will share these solutions to you because I need to attend an ESCO meeting in the office. We'll be starting any minute from now. Okay, so unrealized profit. So what is the sales made to? We've said that the unrealized profit is only half of the goods sold to Jewe, right? The one sold to Gaba, there is no more unrealized profit since it has been sold to the third parties, right? So how much was sold to Jewe?
480.
So
480 million.
unrealized profit is equal to 1/2 multiplied by 480, Abi. Eh?
Yes, that's 240. Yes, sir.
Then they now said a markup of 25%. That's 25/125. Do you understand?
Yes.
Yes, sir.
No, sir,
It's correct,
1
Abi.
over 125.
Yes, see, a markup of 25% on cost. So if you want to convert this markup to margin, it will be 25/125. So how much is the unrealized profit? First of all, half is the unrealized profit because half has not been sold. Half of 480 multiplied by 25/125. So that's how much, please?
48.
48.
48.
Good, good. Now, the entry is this. Who is the seller?
Bata.
So that means parent is the one that makes the sale. So profit goes to the parent. So you don't need to share anything. So you debit your group P or L, 48. Then you credit inventory, 48. Do you understand, please?
The group inventory.
Yes. The one that you consolidate. Correct. Do you understand, please? All right.
Yes, sir.
So let's save it like this. There is one more note. So if you can complete this question, I'll be happy. Otherwise, I will continue from where I'm leaving it now. So the next class will be on Wednesday to be recorded too. So I'll conclude this question on Wednesday, then take another one for you on Wednesday as well. So let's just leave it as it is. So I believe that you'll be able to learn one or two things this morning with this question. Okay. I need to exit now to attend an important functions in the office. Okay. All right. So I'll see you guys. We'll continue the class on Wednesday, and by God's grace, we'll see on Saturday physical. All right. So let me stop recording.
Thank you, sir.
Have a nice day, everyone.
Sir,
Bye-bye.
please share the solution to us.
I will share it. Why not?
I've
I
not
will
been
share it.
writing.
I will share it. So we'll conclude it on Wednesday. Yeah, I will share it right now. Thank you.